Hey everyone, and welcome! Today we're diving into the exciting world of ETFs, or exchange-traded funds. Think of ETFs as baskets of stocks, bonds, or other assets, all neatly packaged for your investing pleasure. They're like the variety packs of the investment world. Why are ETFs so great for diversification? Well, they let you invest in a whole bunch of companies or assets with just one purchase. This instant diversification is a game changer, especially if you're just starting out. Imagine buying one ETF that tracks the S&P 500. Boom! You've instantly invested in 500 of America's largest companies. Talk about spreading your risk. ETFs are also super user-friendly. They trade on stock exchanges just like individual stocks, making them easy to buy and sell. Plus, they tend to have lower fees than other investment options. Score! You wouldn't put all your money on one horse in a race, would you? Of course not. The same goes for investing. Diversification is key to protecting your hard-earned money. Here's the deal. Different asset classes, like stocks, bonds, and real estate, perform differently over time. Sometimes stocks are up, sometimes bonds are down, and sometimes, well, everything seems a bit wonky. By diversifying across different asset classes, you're essentially hedging your bets. If one investment takes a hit, the others can help cushion the blow. It's like having a financial safety net. And guess what? ETFs make diversification easier than ever. You can easily diversify across different sectors, geographies, and asset classes, all with just a few ETFs. It's like having a whole world of investment opportunities at your fingertips. Now let's talk strategy. Building a diversified ETF portfolio is like putting together a championship team. You want a mix of players with different strengths and weaknesses to cover all your bases. First, think about your risk tolerance. Are you a cautious investor or a bit more adventurous? Your risk tolerance will determine how much you allocate to different asset classes. Generally, younger investors with a longer time horizon can afford to take on more risk. They might allocate a larger percentage of their portfolio to growth-oriented assets like stocks. Older investors, on the other hand, might prefer a more conservative approach with a larger allocation to bonds. Next, consider your investment goals. Are you saving for retirement, a down payment on a house? Your goals will also influence your asset allocation. There are tons of different ETF portfolio strategies out there, but a good starting point is the classic 60-40 portfolio. This involves investing 60% of your portfolio in stocks and 40% in bonds. Remember, investing always involves some degree of risk. You can't avoid it entirely, but you can manage it. Generally, higher risk investments come with the potential for higher returns, but they also carry a greater chance of losing money. Lower risk investments, like bonds, tend to offer more stable returns, but they might not grow your money as quickly. The key is to find the right balance between risk and return for your individual circumstances. And don't forget, what feels risky to one person might feel perfectly comfortable to another. It's all about your personal risk tolerance. When building your ETF portfolio, consider the expense ratios of different ETFs. Expense ratios are the fees charged by ETF providers, and they can eat into your returns over time. Look for ETFs with low expense ratios to keep more of your money working for you. Let's look at some real-world examples of diversified ETF portfolios to get your creative juices flowing. 40% bonds, Vanguard Total Bond Market ETF, BND, 30% US large cap stocks, Schwab Total Stock Market, ETF, SCHB, 20% US small cap stocks, iShares Core S&P Small Cap ETF, IJR, 10% international stocks, Vanguard FTSE Developed Markets ETF, VEA, 70% US stocks, Vanguard S&P 500 ETF, VOO, 15% emerging markets, stocks, iShares Core MSCI Emerging Markets ETF, IMG, 10% real estate select sector SPDR Fund, XLRE, 5% gold, SPDR Gold Shares, GLD. These are just two examples, and there are endless possibilities when it comes to building an ETF portfolio. The best portfolio for you will depend on your individual circumstances and investment goals. Ready to take control of your financial future and start building your own diversified ETF portfolio? Great! Here are a few steps to get you started. 1. Do your research. Learn as much as you can about ETFs, different asset classes, and investment strategies. There are tons of great resources available online and in libraries. 2. Determine your risk tolerance. Be honest with yourself about how much risk you're comfortable taking on. 3. Set clear investment goals. What are you saving for? Knowing your goals will help you stay focused and motivated. 4. Choose your ETFs. Select ETFs that align with your risk tolerance, investment goals, and asset allocation strategy. 5. Open an investment account. You'll need an investment account with a brokerage firm to start buying and selling ETFs. And 6. Start investing. Remember, you don't need a ton of money to get started. Even small, consistent investments can add up over time. Investing is a marathon, not a sprint. Don't get discouraged if you don't see huge returns right away. The key is to stay invested for the long haul and let the power of compounding work its magic. Compounding is essentially earning interest on your interest. Over time, even small amounts of money can grow exponentially thanks to the magic of compounding. Think of it like a snowball rolling downhill. It starts small, but as it rolls, it picks up more snow and gets bigger and bigger. The same principle applies to investing. Diversification is one of the most important things you can do to protect and grow your money. And with ETFs, it's easier than ever to create a well-rounded investment portfolio that meets your unique needs and goals. Remember, investing can feel intimidating at first, but it doesn't have to be. With a little knowledge and planning, you can become a savvy investor and take control of your financial future. So what are you waiting for? Start exploring the world of ETFs today and see how diversification can help you achieve your financial dreams. You got this!